Greetings from the future of transportation, where Tesla is driving the charge as electric cars take over the highways and completely transform how we travel. Visionary businessman Gary has some audacious forecasts for the future. Get ready for an incredible ride as we explore Gary's secret plan to make unthinkable profits in the next 7 years and profit from the 54 million electric cars that Tesla expects to sell by 2030. Prepare to be amazed by the technology's immense potential, its astounding projections, and its exciting growth rates. It's time to fasten your seatbelt and go on this thrilling journey into the future. But before we get going, please click the like and subscribe buttons. With that stated, let's start the conversation. Who is Gary to know about himself and why his opinions about Tesla matter? Known for his proficiency in finance and investment management, Gary Black is a well-known investor and the former CEO of Aegon Asset Management. What is his opinion on Tesla, given that he has held executive roles at multiple large financial institutions such as Janus Capital Group and Goldman Sachs Credit Suisse First Boston? Given that Gary predicts Tesla will reach amazing heights by 2030, now would seem to be a good moment to examine the covert approach. The business projects that by 2030, there will be 3 times as many Teslas shipped annually as they are now. Let's get to the point. He believes that EV adoption will increase from its current 3.4% in 2022 to 6.6% in 2021, and then to 10 by the end of 2022. This is a conservative projection of 10.8 slots. Up until it hits 60 in 2030, it will be 16 in 2023, 20 in 2024, etc. According to his forecast, there will be more than 60 EVs in operation worldwide in 2030. He asserts that by 2030, there will be up to 54 electric cars on the road worldwide, although that number is unlikely given the prevalence of robo-taxis. Tesla just has bars. Insurance and power outages exclusive to Tesla. Because of his exclusive focus on Tesla's vehicle production, he is cautious in his estimations, but his projected yearly growth rate of 47% is astonishing. As you may have noticed, Gary's P goes from 61.2 in 2022 to 64 in 2030, and that same year, his stock price peaks at $1,000. Let me restate why we should give Gary significant consideration. In addition to his work in finance, one of Gary Black's most noteworthy achievements in the industry was his effective CEOship of Janus Capital Group, where he led the company from 2006 to 2009 and significantly increased performance. Gary Black is a well-known analyst on business and money matters who has been on CNBC and Bloomberg TV, among other media outlets. The man is knowledgeable. So assuming that in 2030, as Gary projects, Tesla will have an EPS of $42 and a stock price of $1,500, the price-to-earnings ratio PE would be 6.4. He also projects that Gary's projections of exceptional yearly growth rates of 44 in EV adoption and 45 in deliveries will come to pass. His estimates that Tesla's account will increase by 14 from 3.1 billion to roughly 3.6 billion by 2023 are one item that truly defies logic. It's just absurd. It would be absurd if Tesla still had to dilute in 2030 after earning over $200 billion in net earnings. If you want to invest $200 billion annually, you should reduce some buybacks at the same $1,500 price per share. In 2030, the total market capitalization increases to roughly $4 trillion due to inflation. 2023 will be comparable. Black believes that if we receive the $552 a share, the price of a Tesla share will soon exceed $550. The company has a market capitalization of over $2 trillion, which is higher than the present market cap of $600 billion. In the following 6 to 12 months, Gary Black forecasts that the stock might reach a price target of 69p in 2023. This makes sense, but let's talk about the stock price for 2024. Given that Tesla will only be producing automobiles in 2025, 60p would be equivalent to 616.69 or 600 per share. A market valuation of $2.50 trillion and a net income of $45,500,000 are both realistic targets. When you take into account that their income increased by $20 billion from $46 billion to $66 billion in 2026 with a 45 PE, the company's market cap will be close to $3 trillion using a P of 40. If they're making so much money and crushing earnings after, say, a year, the P would drop significantly. Once again, dividing 25p by 23 for Tesla makes no sense, but you guys know me, so we're being cautious. Keep in mind that Gary's prediction has only included Tesla's vehicle-making sector. What happens when we add the true valuation propositions of Tesla? I arrive at a price per share of $832. That's ridiculous. Right there is a semi-automatic 4x4 vehicle on its own. FSD, as you may expect, the price of Tesla insurance, energy, and similar products skyrockets. We'll discuss that in a moment, but first, let's discuss who else believes Gary is a Tesla bull. As one of the company's largest investors, Cathie Woods of ARK Investments has been bullish on Tesla. citing the company's potential to disrupt a number of industries, including energy transportation and autonomous driving. However, in the past, Warren Buffett's longtime business partner, Munger, the vice chairman of Berkshire Hathaway, has criticized Tesla and its CEO, Elon Musk, calling Musk asinine. In May 2021, when a Munger was questioned about Tesla at the annual Berkshire Hathaway shareholder meeting, he said, "I have the reputation of being an old fuddy-duddy, but if a fuddy-duddy like me can see it, somebody else is making the decision to buy Tesla at these prices." And I think it's a huge insane. Additionally, Munger has questioned Tesla's reliance on government incentives and subsidies, saying that while he believes Elon Musk is a smart man and deserves credit, he believes the auto industry is difficult and that Tesla has inherent growth limits even with government support. As with any investment, there are always varying viewpoints and opinions. Other investors might have different thoughts about Tesla. While some might consider Tesla to be hazardous or overpriced, others might view it as a solid long-term investment prospect. It's crucial that investors conduct independent research and base their choices on their personal risk tolerance and financial objectives. Now that we have some FSD forecasts added to Gary's prediction, let's see what occurs. I'm excited about this since in 2022, the average cost to you will be $12,500 due to the increase in FSD prices. They really increased the cost to $15,000. Several bears forecast that by 2030, FSC will be worth almost nothing. In 2020, purchasing an FSD costs $8,000. By the end of the decade, I expect a four-fold increase from current levels. Based on historical trends, we can assume that the FSD profit margin will exceed $1.2 billion by 2022, with sales rising by 2% annually from their current level of approximately $2.5 billion. An additional $2 billion will be added for a total of $15 billion in net income, or $303 per share at a P of 61. The original $6,000 have been increased to a whopping $15,000. It's interesting too. Note that the price per share might vary from $632 to $729. The value of cars has increased from $10.50 to $20.30 per share, and with the addition of FSD, that number will rise by an additional $230. By 2030, the stock price will reach $12.82, and the company's market valuation will be close to $6 trillion. Really, that's incredible. In a matter of minutes, this place will spiral out of control. If the stock price holds true, you will have made an absurd 500% gain by 2030. I am investing all of my money in Tesla stock. I purchased so many shares of the company yesterday and today that I will have to sell the moon to pay for them. I'm not sure how long this will last. I don't know about you, but despite this uncertainty, I have the sensation that investors are feeling pessimistic about the prospects of Tesla stock in the coming year. Historically, Tesla has had strong stock performance, especially during its remarkable surge from mid-2019 to late 2021. The stock fell to a bear market low of 101.84 in early January, but it has since recovered by almost 93% even though. Tesla released mixed fourth quarter numbers for the prior year, with higher than expected earnings but lower than expected revenue. Musk's upbeat forecast for 2023 caused the stock to keep rising. In the event that you enjoy the video, please hit the like and subscribe buttons. I'll see you in the next one. Do you agree with Gary Black's assessment? Is there logic to it?